My last video, where I showed how I make $96,000 per month from my $113,000 dividend portfolio, blew up. And so did the comments. A lot of you loved it, and a lot of you absolutely hated my YieldMax funds. The main criticism was fair. Your NAV is bleeding. This isn't sustainable. You're just getting your own money back. In this video, I want to explain why I'm still okay with that, and why I treat these funds as a bridge to freedom, not a forever strategy. So let's start with this. Most investors on YouTube are optimizing for max net worth at 65, preserving their principal, or beating the S&P. But that's not the game I'm playing right now. I just spent over a decade working weekend nights. I've got a tech services business that brings in okay income. My number one goal wasn't what gives me the highest net worth in 30 years. My question was, what gets me out of my night job in the next 1 to 3 years? That's a completely different optimization problem. That's why I'm calling this my bridge strategy. Now, about the NAV erosion. Yes, these funds have big NAV bleed. That's not clickbait, that's just what they are. The YieldMax funds I'm in use options to create really high monthly payouts. But here's the key thing a lot of people might miss. Sometimes those payouts are more than the fund is actually earning. When that happens, part of what you're getting back is just your own capital handed back to you. And that's why the NAV, the actual value of the funds, trends down over time. Big cash flow, shrinking base. So when you see me say I make $9,600 per month, but you don't look at the NAV decay and total return, you are only seeing half the story. Now the commenters say, your account is bleeding towards zero. You're not wrong about the mechanics, and I understood that going into this. So if I know that, why am I still in these funds? Well, because for me, YieldMax isn't a retirement plan, it's a bridge. I've got 3 income pillars. I have my business, and that's where my long-term growth engine is. I've got my more normal dividend holdings. They're more stable, but they're boring. And then I have YieldMax for aggressive cash flow. It was strictly to get me out of the night shifts faster. And I'm consciously accepting the faster NAV bleed, probably worse long-term returns. And I'm doing that in exchange for freedom today, so I have energy to pour into my business. So some real talk here. I would rather lose some principal on this chunk of money over 3 to 5 years than spend those same 3 to 5 years grinding at a night shift job and never fully building out my business and my life. For me, that trade, more cash now, less capital later, is worth it because I have other income plans beyond this. Now this part is really important. I don't think this is right for everyone. In fact, I think most people, it's probably not right. I would not use this strategy if I had no other income, I was close to retirement and living off this portfolio, or I didn't fully understand that the NAV was going down over time. For me, this is a tactical, time-limited bridge, not a permanent home for my money. If your goal is slow, steady, boring compounding for 30 years, there are way better options than these funds. And this channel isn't about textbook perfect investing. It's not financial advice. It's about my messy, real-time journey and buying back my time. So I'll throw it back to you. If you were stuck in a night job that you didn't love and you had a business that you believed in, would you trade some principal for faster freedom? Or would you take the slower, safer path and protect your NAV at all costs? Drop your answer in the comments. I read all of them, including the spicy ones. And if you want to follow this whole experiment in real time, the wins and the misses, hit subscribe and stick around. Because this is Dividends After Dark, and I'm just getting started.